Welcome back to the call, everyone. 3 Fed presidents have been speaking out this morning on their economic outlook. Steve Liesman has been listening in. He joins us right now with a wrap-up. Hey, Steve.
Hey, Trish, thanks. The avalanche of Fed speak today on the economy and the banking system. This is the first round of speeches that follows last week's Fed decision to keep rates, and I quote here, exceptionally low for an extended period. So they're backing up their votes last week. Fed Presidents Janet Yellen and Dennis Lockhart both offering similar comments on the outlook. They suggest the recession is over, with Yellen saying that the economy has entered a sustained period of expansion. But don't get too excited. Both see a subdued recovery with low inflation. Yellen and Lockhart are voting members and supported last week's FOMC decision. Lockhart, seen as less dovish on interest rates than Yellen, nevertheless said he doesn't see job growth returning until sometime next year, although he added that he could still envision the Fed hiking interest rates with the unemployment rate high. Now, Yellen made a more of a defense of the Fed's low interest rate policy, saying it appears that we've entered a new era of low consumer spending and higher savings, and that another jobless recovery seems to be shaping up here. She said deflation is the bigger risk to the economy and suggested the Fed will remain accommodative as long as that remains the main threat. Separately, as I just reported, Boston Fed President Eric Rosengrad noted that too big to fail, that problem has gotten worse, and that there is currently no system in place to unwind the big global banks. Still coming up today, comments from Fed Governor Dan Tarullo, who will speak on banking reform, and Dallas Fed President Richard Fisher, because, Trish, there has not been enough Fed speak for one day yet.
Okay, thanks so much, Steve. Stay with us. We want to bring in Mr. Santelli all the way from Chicago, and we want to talk about whether or not these markets and the Fed are finally perhaps on the same page. What's your reaction, Rick?
Oh, the stratagem of the Fed is, I think, widely accepted and being used by every equity trader in the country, if not the world. And the stratagem is, you keep everything liquid because things aren't good enough, because small businesses aren't getting enough. But the stratagem is exactly what it is. The banking institutions and many financial institutions' balance sheets are improving, and I think that's exactly what the Fed wants.
I think you're right. Are you saying, look, shooting fish in a barrel? Equity investors know the money machine is going to continue.
Absolutely.
So buying stocks now is like shooting fish in a barrel. Is that what you're saying?
Yes, that's pretty much precisely what I'm saying.
It doesn't seem like they're on the same page, Rick. I mean, I guess,
Why?
Why? Because
I
can't imagine. Well, the Fed, yes. Okay, the Fed wants the markets to go up, sure. But the Fed also has to be aware of the long-term consequences of this. You've said it many, many times before.
I don't think they are. I don't think they're thinking that far ahead.
No,
Steve Liesman?
They're thinking 30 days ahead. And catch that, Steve
Absolutely.
Liesman. I can't contain myself. If Janet Yellen and Lockhart and all these other Fed heads, if they're saying the recession is over, then why isn't the Fed's zero interest rate policy over? They say that they want to, they're figuring recession.
I've read studies on this, Steve, that suggest that it takes the Fed a long time. I mean, you basically are well into a recovery long before the Fed ever raises interest rates.
Go ahead. I'm sorry. Please, Steve Liesman.
What they're
I'm sorry.
He's so patient, isn't he?
What they're saying is that they do not expect the growth rates to be low enough or high enough to bring down unemployment, and they expect to see considerable slack in the economy for a long time to come. In addition,
Steve, let
me just finish.
How do they know?
They don't. How do you know? How do you know? How does Rick know? Rick knows. Besides that, but how do you know, Larry? That's the thing.
I'm not saying I know.
What they're doing is the same thing that the Fed always does, which is here are the greater risks out there, and what I'm going to do is protect against the greatest risks to the economy, which they see as deflation. They don't buy into the inflation story. And I will tell you that I believe, let me just finish this point, Trish, that I think the markets and the Fed are much closer now on the inflation problem. I agree the tip spreads have widened, but in general, this story about hyperinflation being automatic has really backed off a lot.
How can they not buy into the inflation story at all? I mean, Larry's saying it all over there, right? The dollar, gold. We just did a whole segment on commodities
futures,
and metal
zinc,
stocks.
Aluminum, copper. Rick Santelli, does the Federal Reserve
price level, Larry?
Rick, I think the investors. I'll ask you this thesis, okay? If you buy in the fact that investors have figured the Fed out, easy money, buy stocks. But here's the other side. Has the Fed figured the markets out? In other words, does the Fed listen to the market message ever?
Well, I think they listen to the equity prices because, let's face it, the population at large, at least a portion, feel better when equities move up. They understand that just fine. But, Steve said it best, actually. The economy isn't going to generate the kind of numbers on the growth that they want, so they're going to keep things easy. But think about the illogic of that. We are not going to have enough GDP horsepower to bring in enough tax revenues to narrow the spread between the deficits and GDP revenues and tax revenues.
So
this is a date with disaster down the road.
Yeah, this is basically,
Rick, your logic
totally
is
short-sighted, Rick Santelli.
Rick,
in other words,
logic
you're doing
is
what's good now, but not what's good in the long run.
Exactly, and that's what central banks always do. They put out the fire in front of them. They don't care about water or smoke damage.
So as an investor, I can react to that pretty easily.
I was just going to point out that Rick's logic is equally illogical in that what we're saying is raise rates, which will somehow
I'm not,
end
Steve.
up... Well, then what are you saying, Rick?
Here's
Come
what
on.
I'm saying,
Lay
Steve.
it out.
I'm saying you don't need to raise rates much. Greenspan caught a generation of flack because he kept them at 1% too long.
Okay.
Just
what are you
raising
saying,
them
Rick?
enough.
Give me a number, give me a date, give me both. Don't do what you accuse the economists of doing.
Right,
be better than them, Rick. Be better.
Raising rates would be to put it up to 2 or 3%.
Right now. 2 or 3% right now. Rick Santelli.
Go to
1%.
Go to 1% and remove all programs.
That's going to be better.
That will keep the Wilbur Rosses of the world from moving in.
Okay.
Because they're not going to move in because the government has promises.
You're officially
everywhere.
on the record as a liquidationist. Let it all liquidate, throw out, close the banks, raise the rates. Make it harder to get rates.
There's plenty of damn
loans.
banks, Steve. There's plenty of banks. The biggest lie ever perpetrated on this country is those damn 10 banks mean everything to everybody. Guess what? They don't.
Rick, have you seen the senior loan officer surveys?
I don't care about the loan officer survey.
You don't care about anything but what you feel.
You want to know why I don't care? Because
I'm telling
the
you,
money,
look at the data, Rick.
the deficits are creating
not
are making them lend. So
stop
it. Just stop.
They're not lending, Rick.
Right. Why aren't they lending?
So we should raise rates to make it harder for them to lend.
To have customers have the right numbers to do the right loan at the right price, and that's just the way it is, and they're wasting a boatload of dough figuring it out.
By the way, I thought the senior loan officers' credit numbers were coming down. Credit restrictions are
fewer
down.
banks are tightening, Larry, but they're still tightening.
All right, that's something.
I love you guys.
By the way, I'm putting
Great job. All right.
I'm putting up a V sign, but Rick Santelli, my V sign in size 2% in answer to Steve Liesman.
I thought that was a peace sign.
2%.
I thought that was a peace sign.
Because the unemployment rate is not high enough for Larry.
I have to get out. Gentlemen, thank you very much for a very low